welcome. You're watching Business Today television. I'm Tanya Aneja. Well, Indian markets are on a roll. We closed the first half of 2023 with gains of around 5% on benchmark indices. However, there are some areas which are not doing a whole lot, despite of a rally in the market. So if you and your portfolio have still not, participated in this ongoing rally, then this episode is for you. And my guest on the show today is Mr. Amit Kumar Gupta. He's the founder of FinTrek. Thank you so much, Mr. Gupta, for taking the time out and joining us here on Business Today television. And Indian markets continue to scale new heights, and but some investors still have that FOMO because the stocks in their portfolios, they have still not yet performed well enough. So what would be your advice for those investors who have missed this wonderful opportunity?
Yeah, hi Tanya. Thank you for having me. So you are correct. Certain sets of investors' portfolio, they haven't made a new high as benchmark indices, especially the Nifty and Sensex and even the mid cap indices. They have made new highs. So now
Right.
this could be due to the positioning in certain sectors uh, which haven't rallied or even corrected in this rally. So I think we are seeing a sort of a momentum catch up in certain pockets, a certain FOMO happening in the markets. And in those pockets, I think the valuations have become really expensive and they're pricing in growth for the next even 2, 3 years, I would say. So I think in this kind of a scenario, my advice is that we have to exercise some strong restraint when valuations are not to our liking, and we hold some sort of cash component in the portfolio, especially when the valuations remain elevated. But at the same time, we want to be ready to invest at the first available opportunity on correction. And if and when that correction happens, either in our watch list stocks for fresh initiations or adding more to our existing position, we should be able to move into this. My experience in markets such as the current one, my scenario is that the valuations have run up, but the participation is not at its peak. So I think there will be ideas which we can add to the portfolio, which can make a significant difference to the portfolio returns overall. But one needs to move away a little bit from the consensus and probably go contra in finding the opportunities. Because if you go contra, then even if the market correction happens, then your portfolio may not fall that much. So my sense is that my advice is that it's a time to prepare the cash in the portfolio and hold it for the next round of correction where you can deploy that cash.
Okay, absolutely, got that. And also, Mr. Gupta, first half is now gone. So for the second half of this calendar year, what would be your, top sectoral bets wherein, the valuations are still reasonable, especially for the near term?
Right. So I think for the second half, one sector or one theme, I would say, which we are taking a contrarian approach, and that is the rural sector theme. Because I think that sector did not rally too much during the last 3 months because in anticipation of a bad monsoons. I think in that sector, the valuations are still reasonable, and even in certain cases, even at multi-year lows. So I think sectors like agrochemicals, fertilizers, dairy. These are on our radars, and we are looking to build some positions in this space over the next 3 months or so. We have already started, but we will be gradually building positions in these themes. The reason for that is I think the El Nino was one-time impact, and we should be okay despite some slowdown, uh, despite the fact that there is 20% less kharif sowing happening. It was a big risk heading into Q2 of this financial year, but I think the rain gods have sort of favored us, and we should be okay in three months of the time. So that's our contrarian approach which we are taking. At the same time, we continue to remain positive on specialty chemicals, auto
Okay.
ancillaries, and the microfinance space. Out of this, chemicals are our largest positions. We feel that it's a decadal theme, and a lot of opportunities still look very reasonable from a risk reward perspective. We feel that short term headwinds will be safely mitigated from H2. and margins will eventually normalize. So yeah, these are some of the themes and the sectors where we are betting in H2.
Okay, absolutely. So these are the sectors that are coming in. So keep an eye on that. And also, Mr. Gupta, if someone is sitting on hefty profits, so is it a good idea now to book like 25 to 30% of profits in profitable positions and come to areas which have not really moved, or should one stay invested at this point in time?
Yeah, right. I think given the strong rally in the past 3 months since the March bottom, I think it would make sense to take some profits off the table selectively. Since at FinTech, we deal with stock-specific strategies, we have been advising subscribers and our clients to take some profits off the table. So certain sectors like defense, capital goods, railways, where we were already invested and still invested, we have taken actually some profits off the table and pocketed them. But again, it's a very stock specific approach, and only where we feel that valuations have become quite expensive. It's not a broad market call to raise cash like it was in early 2022. So I think we have seen a lot of inflows happening in mutual funds,
Right.
PMSs as well. But I still feel that my scuttlebutt talking to people, talking to investors says that there is still a disbelief in this rally. So correction may actually take some time to come. So one needs to be patient in deploying that cash. But I think it makes sense to book some profits, especially if your stocks have become expensive.
Okay, absolutely got that. And also, let's talk about a sector that is in focus. Let's talk about IT sector. So Q1 happens to be, I think, the strongest quarter for the IT sector. However, this time it's going to be different. Given the challenging macro conditions, the earnings were a mixed bag in FY23 if we see, but the sector made quite a bit of bounce back in the week gone by, and now the earning season is almost here. So how to really approach IT sector at this point in time, and at this point in time, and your thoughts on this particular space?
Yeah, see, just to give a background, the IT sector actually saw a very significant rally post-COVID, and it was one of the first sectors to rally as people started working from home and a lot of businesses went digital. So I think in 2020 and 21 also, a lot of investments have gone into IT, and now we are seeing a little bit of a slowdown in those IT investments, especially post this banking crisis which happened in March in US. So we have been actually underweight for almost 1.5 years onto the sectors. We actually cut our exposure very heavily, late 2021 and early 2022. That's because, basically it was a valuation call because they have gone up so significantly at that point of time. Uh, I mean, if we divide the IT space basically into two parts, one is this large cap and other is the small and the mid cap. Uh, Out of these two, from an alpha generation perspective point of view and our own positioning, that is more toward the small and mid cap space, where our uh, positioning is more niche businesses and who are working in niche geographies. I do believe that H2 will be better for IT companies than H1, but I think there are still many ifs and buts given the recession-like conditions in US and Europe. We don't like large cap IT too much because of multiple moving parts. Valuations are not an issue after the earnings downgrade. I think the last quarter we have seen a lot of earnings downgrade in IT sector, especially the large caps IT, from both banks and brokerage houses. Uh, so I think valuation is not so much concern. It's just that large cap IT has the impact is across multiple geographies and multiple verticals. So it's a little difficult to estimate, what will move the stock price in very near future in the next 3 months or so. Having said that, I will be closely watching the space, and if there is some unwarranted correction in large cap IT from the current prices also, we might look to initiate some positions into it. Yes. But right now, I would stay underweight IT, and our positioning currently is more towards the small and mid cap IT.
Okay, absolutely. That's the verdict coming on IT space. And lastly, before we let you go, since you were talking about mid cap and small cap space, I would like to understand from you that we have seen this tremendous amount of rally in broader markets. So Do you see opportunities in broader markets at this point in time, or it's overheated according to you, especially given the amount of rally that we have seen so far?
So yes, we have seen a good rally from the March bottoms in both small and the mid caps. Both have rallied, more than 20%. Uh, you know, uh, if you look at the comparative valuation, then I think mid caps is much more overheated. We had almost like 17-18% stock price growth CAGR in the mid cap space. So I think the mid cap space is already discounting the earnings for the next 2 years at least in most cases. So I think that part is definitely overheated, and we are trying to move away from that part by booking profits at least partially. And we are still, I think, in small caps, the valuations are in certain sectors they are reasonable, and there we are trying to deploy the cash which we are generated from booking profits in mid cap. So I think it's a valuation call at this point of time that moving from mid caps to small caps. But I think India has a long growth path ahead for the next 3 to 5 years, given what is happening globally and given the geopolitical situation. So I think once a little bit of correction happens in the mid cap space and the valuation becomes a little cheaper, then I think we would be interested more. But for short term, I think it's definitely overrated, the mid cap space. So small cap space for us is more attractive than the mid cap space.
Okay, absolutely. So small cap space, that is more attractive. That is the word that is coming in. And on that wonderful note, thank you so much, Mr. Gupta, for sharing these wonderful insights and being with us here on Business Today Television. Thank you so much.
Thank you, Tanya. Thank you for having me.
So with that, let's wrap up this special episode. But don't forget to follow us on our social media platforms like Facebook, Twitter, LinkedIn, Instagram. Do share your stock queries, stock feedback. So stay tuned for all the latest market updates, and many thanks for watching.
Joining me now is our newsmaker tonight, NCP leader and the former Union Minister Praful Patel joins me. Appreciate your joining us, Mr. Patel. The big question, till yesterday morning you were seen to be Mr. Pawar's closest ally aide. Today you've been expelled from the party by